Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and today we're discussing estate administration, how to manage a decedent's affairs. Estate administrators have many responsibilities, including to collect and inventory decedent's assets, determine debts and pay creditors, distribute excess, if any, to heirs and beneficiaries, file tax returns, pay taxes, and submit probate documents to court. Administrators can become personally liable for taxes and penalties if they fail to file a decedent's tax returns or pay taxes on time. Early on in the estate administrative process, administrators should verify filing due dates for gift tax returns, the estate return, fiduciary returns, and the decedent's final income tax return. If the decedent is required to file a fiduciary or estate return, the administrator should request a federal EIN from the IRS using Form SS4 and may wish to file Form 56 with the IRS in order to receive notices. If an estate return will be required, the administrator should also request Form 712 from any life insurance companies with which the decedent had a policy, and should remember to file all required tax returns when due and pay all taxes on time to avoid penalties. The administrator may need to file Form 1040 to report income that was earned during the year prior to the decedent's death, and may need to file Form 1041, a fiduciary return, to report income the decedent earned after his or her death. Larger estates may also trigger the requirement to file Form 706 to pay estate taxes or 709 to pay gift taxes. If the decedent is required to make a final income tax return, the administrator will file Form 1040 following largely the same rules that other taxpayers use. Some of the differences, however, include the non-deductibility of funeral expenses, writing deceased across the top of the heading section of page 1 of Form 1040, signing the return either as surviving spouse or representative, and Form 1310 and a letter of administration may need to be attached to the form if the decedent is entitled to a refund. Income earned after the decedent's death is part of their estate. If the estate has income of over $600 for the tax year, then Form 1041 must be filed. It's due 3.5 months after the end of the year, which is established by the fiduciary. For example, if a son's father dies on March 10th, the son is the executor, he can set December 31st as the end of the first year. Form 1041 would then be due on April 15th of the next year, 3.5 months after the end of the year. If the form is not ready on time, an extension can be filed using Form 7004. Remember that estates do not pay income tax on income that is distributed to beneficiaries. Administrators must distribute property in accordance with the will if one exists. Property is inherited at a stepped-up or stepped-down basis according to the fair market value of the asset on the date of the decedent's death, and some assets may automatically transfer outside of probate if they are located in an irrevocable trust or held jointly with a spouse, for example. If you have questions about estate administration or need help, call the experts at AA Accounting. Our knowledgeable, experienced staff is available year-round to assist you. We look forward to hearing from you.